Joining me now with three names to insulate against the choppiness is David Bahnsen. He's founder and chief investment officer of the Bahnsen Group. David, let's start with the names you like and maybe from there extrapolate where investors should be a little more wary right now.
Well, I mean, we're, perpetually dividend growth investors, and so we want to look to names that we think are going to grow the dividend through geopolitical disruptions like this and through recessionary periods and through any other kind of market cycle. And so those are the types of names we naturally migrate to. This Russia-Ukraine incident is no exception.
Yeah, a couple of the names, Walmart, not that controversial, even Exxon, but then you throw Clorox in there, and that one's been a tough stock lately.
It has, and really, we like to put stocks in front of you that are tough lately, right? We're contrarians at heart. It just so happens Walmart had an incredible quarter and great results, and Exxon is up over 100% in recent time. Clorox is the one that we entered after their earnings results just a couple weeks ago. We didn't think we'd ever see sub 150 again. It had gotten above 180, and we were able to come in the 140s and buy a meaningful amount. Clorox is a very interesting consumer staple. Unlike a lot of the big consumer staple names, Clorox does not fight against private label, white label competition much. They really have a great market share, a very diversified brand portfolio, and yet they've had margin issues like everybody with input prices rising. We think they have a great plan to rise above that, and Clorox is a good valuation story. And
in terms of Exxon Mobil, you like the stock, even though you'd kind of echo, I think, what Dan Pickering said earlier this hour, that the oil price is maybe easily $10 or $20 higher than it should be right now.
Oh, that's right. But Exxon is making an awful lot of money with $50 oil, let alone $95 oil. The reality is that Exxon cut so much cost out of their cost structure over the last couple years. They continued to pay out their full dividend through all of COVID, even grew the dividend modestly last year, and now we just like what we see in front of it, upstream and downstream. Exxon has really impressed us with capital discipline.
What would you say to people sort of in terms of the sequence of events here on the Russia-Ukraine crisis? I don't know if there's any that kind of, for you, pop to mind as analogous here, as people just watch stocks go sideways to lower and figure out, what they need to be thinking about or doing in this environment.
Yeah, that latter part I think I can speak to as to what I think investors should do. I wish I could speak to the first part, although if I knew what was going to happen in sequence with Russia, Ukraine, I suspect the White House would want to hear from me. No, none of us know. Vladimir Putin is a very unpredictable person. He has an upper hand here. But the main issue for market participants is what you've said, ongoing volatility. I don't think people are selling today because they know why. I think it just has the effect of creating uncertainty, and that's understandable. It's happened a million times throughout market history. It's going to happen a million more, but there's no fundamental reason per se that people are hitting a sell button today. So that's the way we want to view it, is to be immune from volatility.
Sure.
Focusing on dividend growth really helps.
What about those, and now we're getting really big picture here, but who worry that the peace dividend from the post-Soviet period is now ending and that unleashed this kind of massive upside in equities over the past 3 decades, and maybe now we don't get that benefit. Maybe that plays out in reverse.
Yeah, if people believe we're going into a whole nother Cold War and that we're going to go back to the terrible returns we got in the 1980s, then I guess we could have that discussion. But of course, we actually got very good returns in the 80s and through the 50s and 60s as well. We had one bad decade in the Cold War. Market earnings have never perpetually responded to geopolitical news. Even 9/11 and an actual domestic attack on our soil lasted about 6 months long in terms of market impact. We have a way of rising above it if you believe in the whole free enterprise story to begin with. I don't think that's what this represents. I think Putin is playing games. He's very good at it, and he's going to get something he wants out of this. But no, I do not think we're going back to another Cold War. And if we did, you can't invest into a tail risk like that. It's just impossible to forecast multi-generational tail risk.